If you have a question about how to become your own banker, don't hesitate to let me know what it is. I will get you an answer. Hello and welcome to the Durham Talents Channel. My name is Jesse Durham. Welcome to another installment in our question and answer series. Let's dive in on these questions of how to become your own banker. Trey asks, how do I know when it's the right time to get another policy? And then he says, I know you're already going to say, what do you think is appropriate for you? So this is a question, and I appreciate the conversation that we've had, Trey. Here it is for everybody because this is a common question that I get, so I will keep addressing it. I do not mind. And I can remember when my wife and I had our first policy, we had it in the summer of 2016. Yes. And so first policy, I mean, it wasn't 6 months later that we were already talking and planning and getting towards that next policy. So I'm not putting that time frame out there for any other reason other than just to say it's a natural progression to ask. I'm not saying you jump right off the bat. Everybody's timing is going to be different because you're building your own privatized banking system. So, but it's a natural progression to get to ask. I remember feeling that way. We were tackling debt with that first policy, and we wanted to be capitalizing even more, even though with that first policy, it was actually a pretty significant policy for us. Getting started is a pretty significant ratio of our income at that time, but it still didn't take us long to realize that we wanted to do more. We wanted to go even more progressively towards becoming our own banker by capitalizing a second policy. And it behooved us to get someone else in the family with coverage, of course, at that time, being my wife. So we got the first policy on me, next policy on my wife. So again, I'm saying this is going to be indicative of every individual situation to address when you get another policy. So Trey asked that. I believe we actually have that a second time in here. So yes, Trey had already caught on. We'd had enough conversations in our process for him to realize that I am going to kick the ball back to your court. I am going to push back, and not because I'm hesitant to give you a direct answer, not because I'm hesitant to give a direct answer here for the folks listening to this question of how do I know when it's the right time to get another policy, but I am saying that you should know. This is becoming your own banker. This is not asking Jesse about, how to become my own banker. So again, that's what I'm here for. I'm a coach. I'm a mentor. I help people. I write policies for folks. We have great conversations about your situation, your plans, your aspirations, what you're doing. And I'm going to give you answers to the questions, but I'm also going to empower you to arrive at those answers for yourself. Nash would talk often about how in Scripture, Jesus would answer a question with a question, and he did that in his life, and I like that approach. I like kicking back and just giving opportunity for things to brew and things to simmer and things to sink in, and for you to arrive at knowing appropriate answers for yourself. But it may be another person that you want to get coverage on. That's a great reason to have another policy, whether that's a child or a grandchild born into your family and you're adding on to your system as soon as possible. A couple of weeks after that child is born, we could be taking care of an application. Really. And all of our children have policies on them, of course. So there are many reasons. That could be one, that you have a new family member, for example, someone else, a new business partner. There could be lots of examples, but someone else that you need to have a policy on would be a great reason. You're expanding your system because you've had some increase in income or some decrease in expenses, and you'd rather that capital go towards your privatized banking system, and maybe you're already maxing out what you could do with a policy or policies that you already have. So that's the answer. And it's really going to be honed in via a conversation show. So thank you, Trey, for asking that question, and thank you, everybody, for letting me address it here for the benefit of us all. Matt asks the question, do I have to borrow right away, or can I wait a couple of years? Okay, so this is a great question. I really like this one because normally it seems that folks can fit into one of two camps. One, they're really firing on all cylinders financially, and they're looking to build legacy, and they're looking to warehouse their wealth. Maybe there's not something imminently on their radar, and they just see themselves capitalizing their privatized banking system for some time with no immediate anticipation of accessing capital and financing something or paying something off. Okay. And then there are folks like myself that got started several years ago who know right away, immediately, that we're going to use this policy for recapturing debt or financing this year's family vacation or what have you, a vehicle, whatever the case may be. So I wanted to address this question to give that very simple answer of, do you have to borrow right away? No, you do not. Everybody's in different modes, have different aspirations and plans. You're at different points in life. You're going to do what you want to do. You can just capitalize. You can access that capital for paying off things. Again, you're becoming your own banker. You choose where you're at, what you're doing, and then, of course, that can change next week, next month, next year. Okay, because you're your own banker, you can address that issue as it arises yourself because you're your own banker. Now, there does seem to be this perhaps misunderstanding out there that you may have to capitalize because perhaps people are just still too inundated with information about traditional whole life insurance, not life insurance that's been structured for the banking purpose, not an IBC style policy. And they're thinking that it's going to be years, because folks like Dave Ramsey's or Susie Orman say that, well, whole life, you could be paying premiums for 10 years, 15 years and not even have a cash value to access. And that could be true, by the way. If you've not heard me address that in detail, keep diving in, keep learning. We've got plenty of information out there. That could be true. But of course, if it's an IBC style policy, you have immediate access to capital. In the very first year of your very first policy, immediate access to capital. And my definition of immediate is within 30 days. Okay. So first year, brand new policy, we access capital in our policy to begin tackling goals that we had, and you can too. Now, so when I'm having conversation with folks as well, and we are talking about their plans, there still may be this lingering suspicion that it might be 2 years, 3 years, 5 years before they do access money in their policy, make a policy loan for something. And again, I would reference us all back to Nash's book. It's in part 3 where he's talking about how to build your own banking system. So very appropriate, right? But it's in that section of the book in the 40s, maybe 41 through 44, page 41 through 44, where he's talking about many people would like to jump to something, let's say, like a mortgage, because they see, you can look at a mortgage statement and realize how much interest is just bleeding out. Just pure interest for years and years, just paying pure interest. And they'd like to tackle that. But it's such a big item to tackle for most folks that it makes sense to start smaller. So what I encourage folks to do, of course, is let's get some easier wins under your belt. Let's not wait. Again, you're your own banker. You can decide what you want to do. But if you have active debt that you would like to pay off, or if you have something actively that you need to be financing, you don't necessarily have to wait 2, 3, 4, 5 years before you can use your policy to begin in on that, because you're going to be surprised about how you can recapture interest that was otherwise going to someone else, and how much sooner that can snowball into you having more capital to access for the next item on your list, or to just speed up the process of whatever it is that you're already doing. You can recapture capital. You can get animated by seeing how this actually works, and you might decide to pour more fuel on the fire. So no, you do not have to borrow right away, but also, yes, you can. Again, that's going to be based off of your situation and our future conversations. But thank you, Matt, for asking me that question and let me share that here with everybody. Amelia asks, can I give my children my policy? And then she asks a second question of, if I had a policy on them, what would their premiums be like? Okay, so great questions here, thinking ahead. this is someone in our process getting approved, already been approved for a policy on themselves, family. They've got children, of course. So can you give children your policy? Yes, it's a private asset. You can transfer that. Now, I will say that if you have a policy on your person, on your body, you are the insured and you're also the owner, can you transfer that to them? Yes, and it may be appropriate. You may want to do that. Also, it may be the case that if it's on you as the insured and you're the owner, that you may want to just keep the ownership of that policy. And of course, in your legacy planning, you may just have those children, of course, as beneficiaries. That way you have the use of the policy in your lifetime. And then, of course, ultimately, you can accommodate for and plan for and build a tax-free transfer of wealth to those children. And in the meantime, again, if you maintain ownership, what could that look like as your children grow? Well, you're the owner. So you get to decide what you want to do with that capital. So if you want to use the capital in your policy for things with your children or for your children, then do that. If you want to take care of their education with your policy, if you want to help finance vehicles for them with your policy, if you want to fund summer camps, awesome. Sports, awesome. So within whatever ability you have with that policy to provide or gift or what have you to your children, again, you own the policy. You control what's happening with that capital, so you can use that to finance those things that you would like to do for or with your children. But again, ultimately, yes, it's a private asset. You can transfer it to them as long as they're not minors. And again, you could also just use that policy for the things that you want to do with them and for them. And then, of course, ultimately, we're all building up a cash value and a death benefit in this policy. And ultimately, that's going to be a tax-free transfer of wealth to whoever our beneficiaries are. So great question there. Second question on policies on the children. So what would their premiums in particular was the question here to be like? Well, premium is always your question to answer. I don't tell people the numbers. I will commonly ask, well, what's a real conservative number that you have in mind that you're considering to pay in premium? What's a real ambitious number that you've also had cross your radar, but boy, it raises your eyebrows and it's a stretch? And okay, maybe we'll land somewhere in between there where you say, yep, that's the number for me. So it's going to be something that's reasonable, it's logical, but it's also ambitious, it's also imaginative. Somewhere between those two ends of the spectrum when considering a premium is probably what's going to be appropriate for you. Also for your children. Now, there are parameters that we work in structuring children's policies, and that's going to be based off of the in-force policies that the parents have on them. So the parents need to have death benefit in force on them first before an insurance company is going to consider policies on children, of course. And then you're going to be looking at getting policies on each of your children at the same time. So we're not playing favorites. Insurance companies would wonder about that. Why would you on this child and not on this child? So there are going to be numbers that we will work around. And in general, a child's going to be approved for an amount of death benefit that's half of what a parent is. So there's some information for now. Again, I'm happy to have a conversation with anyone else that is looking ahead. Like my wife and I, we have gotten policies on each of our children. We will get more, God willing, of course. Amelia and I have already had this conversation. And I hope that it's been helpful for everyone else here now. Barbara asks a question about a segregated account. Now, a segregated account is just a regular checking or savings account at your commercial bank that you may decide to use exclusively for your IBC interaction. So maybe that's the account that you use to pay your premiums from, just for ease of tracking. And perhaps that's the same policy that you receive policy loans to. And if you're using your IBC policy for paying off debts or what have you, and you're making those quote unquote payments back to yourself, you may just temporarily place those in that segregated account just to keep your your tracking of your system clean. And Barbara asked this question about the segregated account. Barbara asks, is it, meaning the money in a segregated account, going to be sitting there? And then she asks the second question of, will I be able to add it all to the policy later? Okay, great. So will it just be sitting there? Yes, but normally, let's take paying off and recapturing debt, for example. That's where I got started with the IBC. I know plenty of people that do. So if you're taking a policy loan from your in-force policy and you're paying off your lowest credit card, let's say you pay off a $500 or $1,000 credit card. You pay that off. Well, whatever the monthly payment was, whatever it had been to that credit card, the $25, the $50, whatever it was, whatever that payment was that you had been making to the credit card people, well, now you're supposed to take that payment and maybe throw some extra interest to it, giving a value to your capital. But you're supposed to take that payment and start putting that back into your system now. Well, does that mean that you send an extra $25 to the insurance company, that you call them up and you make that additional premium payment? Perhaps not. What you certainly might do is just take that $25, that $50, that $100, and just put that in that segregated checking account. Now, once that builds up, because those are the three rules of banking, right? To pay yourself first, pay yourself with interest, and then recapture the money. Well, once that amount in the segregated account does build up to a significant enough level that you're noticing it, what do you do with that? Is it just sitting there? Well, yes, but remember, that's recaptured interest now. That's interest that otherwise would have been going to the credit card people. So you got to recognize it's already accomplished one great job. Okay, well, a couple of great jobs. It was already premium to your life insurance policy, that appreciating compounding asset that you now have. Also, you're able to leverage it and pay off that credit card or pay down that credit card. And now that is capital that's moving back towards your privatized banking system. So it's accomplished multiple jobs, in fact. But now let's point out that, well, you do have options of what you do with the money in that segregated account. You could take that money and it could just be building up in anticipation of whenever your next premium payment is for that policy. Your regular scheduled premium payments. That's an option that you have. You're your own banker. That's something you could do. Also, could it be paid up additional premiums to your policy? Yes, that could be unscheduled additional premiums that you make above and beyond the scheduled premiums to your privatized banking policy. Could you also just leave that there and let that accumulate to a point where between that amount and the cash value that you have continuing to build up in your policy, that you combine those numbers to pay off the next item in your debt recapture? Yep. That's also an option. So lots and lots of options. I would encourage folks to have a segregated account. It keeps things clean and neat and tidy, and you can really see the effect that you have in privatizing your banking by using your policy, this segregated account, and then tackling things like debt or financing something. So great questions. The second one, will I be able to make that as additional policy premiums in the future? Yes, we already addressed that. So great question. And thank you, Barbara, for asking that. Nick asks, can I open more than one policy under my name? So again, real specific here. We did already address that. When's the right time to get another policy? But again, I know that this is a big moment for lots of folks. It was for me. Nick asked, can I open more than one policy under my name? Now, that could be interpreted two ways. I already addressed it with Nick, but I'm going to address it here for everybody else. Under my name. So can you have more than one policy on your body with you being the insured? Yes, that is possible. There are parameters. We could talk about that. We handle the insurance side of that together, of course, but we're building it around becoming your own banker. We're building banking policies, IBC policies. And yes, the answer is yes. Also, can you have more than one policy under my name, meaning I have a policy on my body. I'm also the owner, but I own a policy on my child. So my child is the insured. My child has the body, but I'm the owner. Yes. Yes, I can have a policy on myself. Yes, I can have a policy on my child. So the answer is yes. So great question. Nick, I appreciate you asking it. I know we already had our great conversation, and I love it when folks are having these growing moments. See, he's already got his first policy, and he's a forward thinker, active and productive, and he's looking ahead. The answer is yes. Yes. And then my last question comes from Catherine. She asks, is there a way for the payer of an IBC policy, of a policy, on another family member to be authorized to pay additional premiums if they want? Okay, so I know what's happening here. So one family member is paying for a policy on another family member, a minor, and the parent of the minor is just asking, well, because we're the owners of the policy, the parents are, but here we have this uncle that's making premium payments. And the uncle does not have, but without ownership, of course, the same access to information and whatnot that the owners do. And just to make things easier, simpler, more seamless, yes, it is possible for someone to get an authorization to find out, okay, well, what extra PUA, paid up additions, premiums could be made above and beyond the scheduled ongoing premium. So if an uncle is paying for a niece or nephew's insurance policy, and then that niece or nephew, their parents are the owners of the policy, so you've got a body that's insured. Okay, the insured would be the child, the minor. The owner are the parents of that child, but then the payer on the policy is another family member, an uncle in this case. So the answer is yes, so that there's not excessive back and forth. The payer can just be authorized to call the company up, find out, hey, how much extra could I pay if I wanted to pay some additional premiums into this policy on my family member to be building up this asset for that minor. And that's a beautiful thing. That's a beautiful, beautiful thing. When that right there is the embodiment of what Nash was talking about when he was talking about intergenerational thinking and planning and doing. So yes, that's possible. That's a form. That's an authorization form that's going to accommodate this family banking that I'm describing here, and that I hope that you're catching on to, because if you're a client, this is what you can build towards. This is what we've built towards. Owning multiple policies with multiple companies on all of us and others that we have a vested interest in. And it's possible for you to build a privatized banking system where the next generations will not have to subjugate themselves to this servitude in the conventional financial system. So I hope that that's been helpful. It's been a great pleasure for me to address these questions. If you have questions, feel free to put those down in the comments section below, or to have a direct conversation with me. Don't hesitate to reach out. We could talk about IBC for your household, for your business, for your legacy planning, whatever interests you and would be helpful to you. And I do look forward to that conversation. I would encourage you to share this with others, family members, friends, business partners, folks that you would like to see win with money. And I look forward to our next conversation. Have a great day. Take care. Hello and welcome to the Durham Talents. No, let's do oh man, did I not do that on that? I didn't do it on that last one, I don't think. Doggone it. It's all good. My goodness, yes. How devilishly handsome you are.